All right, good morning, everyone. It is 10 o'clock on the morning of December 2nd, 2022, and this is my market strategy session. And so the upward pressure on the market still exists. You can see here, we put this low in, I guess this is the 30th of October. Let me move the volume out of the way real quick. So we have this low. These are the Qs. Have this low on the 13th of October. Another higher low in the start of November. And now it looks like we have another bit of a higher low again here at the end of November. And so the way things are shaping up right now is we have this channel, this downward channel. We are in a bear market. However, the markets are acting like they want to test the upper end of the channel here for a possible breakout. I mean, it is possible. I'd really like to see for a breakout to the upside to be sustained. I'd really like to see this gap fill. There's a gap down here between 267.76 and let's see. Let me put my magnet on. And 276, so about a little bit less than a 9-point range there of a gap that is left unfilled. So from a technical perspective, there's some repair work for this chart to do, and to see the Qs come down and fill that gap and then move forward, I'd be much more bullish on the market than if it just goes through and breaks through it now. I think it'll be just very temporary. If we go up to this upper limit and break through it, I think it'll be just a short matter of time before it comes back down again. The jobs report came out today at 8:30, and you can see the way the market responded to it in the pre-market here. This is 8:30 in the morning, and let's see, the market dropped on the report by almost over 2.35%, almost 2.5% on the news, and now it's kind of leveling out and building again. This is a bit of a bearish. This is definitely, this move right here is very bearish. This entire move right here is very bearish. So after some consolidation, after the first, say, hour of the market today, I'd expect to see it turn bearish. And the reason that it's bearish is because the jobs report came out stronger than expected in a few respects. I think the plain sort of like headline number came in at 260 some thousand, and the market was expecting something closer to 200,000 on the non-farm payrolls, and break it down like month over month and year over year and so forth. It's quite a bit higher than expected, and Powell has stated that the labor market is pretty much the predicate for how either hawkish or dovish the Fed is going to be in raising rates. So, and apparently, salary, like month over month wage gains were at 0.6, which, if that's sustained over a 12-month period of time, it's a 7.2% increase in wages, which is pressure on inflation. And so the market definitely doesn't like this last report, this last inflation, jobs numbers report. So kind of a bit of whiplash happening here with the Fed coming out dovish here. That Wednesday, yeah. And so the market really rallied on Fed speak here on Wednesday, and now here on Friday, after a jobs announcement, it's pulling back again. So there's still a coiling thing happening here And on its face, it's bullish because we have this run up right here and then the sort of flag. And usually the way these things, when there's a run up and some consolidation, usually the way that it resolves itself is to the upside. So I think if there is going to be an upside move after this coiling, it's going to be truncated, it's going to be short-lived, and then we come down and fill this gap. So, we'll see what happens. I definitely would like to see things turn bullish on the market, everything, because it's a lot easier to make money on the bull side than it is on the bear side. But you got to trade the market that you're in. So trade the chart that's in front of you. So for the time being, I'm looking for a breakdown below 276, which is significantly lower than it is right now, or a break up above 293. All right, everybody, good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I'll see you on Monday morning's strategy session. Have a great weekend, everyone. Thanks for tuning in. I am out.